How Bitcoin is taxed. The IRS treats Bitcoin and other convertible virtual currencies as property, more specifically a capital asset, rather than a currency. That means there are tax consequences whenever Bitcoin is bought, sold, or traded. This might sound like a minor distinction, but it's not. It determines how Bitcoin is taxed, similar to how owning and trading stocks or exchange-traded funds, ETFs, can trigger capital gains taxes. With that said, it's important to have the information you need to make sure your taxes are calculated correctly. You'll also want to consider tax planning techniques you can use to try to minimize the taxes you pay on Bitcoin. The IRS and Cryptocurrency. The IRS treats cryptocurrency, like Bitcoin, as a capital asset. It has indicated that virtual currency doesn't have status as legal tender in any jurisdiction. It's referred to as convertible virtual currency if it has an equivalent value in real currency, or if it ever serves in place of real currency. It can be exchanged into another currency, either real or virtual, and it can be digitally traded. When do you have to pay taxes on Bitcoin? Because the IRS treats Bitcoin as a capital asset, it is subject to general tax principles. If you invest in Bitcoin and then sell or trade it for a higher price than you bought it for, you owe capital gains taxes. If you own Bitcoin and use it to make a purchase, that is also considered selling it, so you will have to pay capital gains taxes if the Bitcoin you own is worth more than what you paid for it when you bought it. If you're paid in Bitcoin for goods or services, you must include the fair market value of the Bitcoin you in U.S. dollars in your gross income. Transactions using virtual currency should be reported in U.S. dollars, too. As with other types of assets, you would acquire them first, often by exchanging cash for the assets. You then own them for a period of time, and you might eventually sell those assets, give them away, trade them, or otherwise dispose of them. Capital gains taxes come due at this point. 4 things may happen if you sell, trade, or no longer own your Bitcoin. Income is realized from any gain. Gain is measured by the change in the dollar value between the cost basis or purchase price and the gross proceeds received from the disposition or the selling price. The tax rate that applies depends on whether the property was held for 1 year or less, a short-term gain, or for more than a year, a long-term gain. Disposition of property is reported on your tax return using Schedule D and Form 8949 or Form 4797. These forms require that you show your math when you're calculating a gain or loss. You'll do your calculations right on the form, per instructions. Reporting cryptocurrency on tax returns. Cryptocurrency transactions must be reported on your individual tax return or IRS Form 1040. If you engage in any transaction involving cryptocurrency, you must check the appropriate box next to the question on virtual currency, even if you received any for free, including from an airdrop or hard fork. Do not check this box if you only engaged in transactions among wallets that you yourself own. How capital gains taxes work on Bitcoin. Suppose you purchased 1 Bitcoin for $30,000. You then sell it for $50,000, so you have a $20,000 capital gain. This would be a short-term gain if you held the Bitcoin for 1 year or less, and it would be taxed as ordinary income according to your tax bracket. It's a long-term gain taxed at a rate of either 0%, 15%, 20%, depending on your overall income, if you owned the Bitcoin for longer than 1 year. The net investment income tax. You might also find that you're subject to the net investment income tax that applies to investment income. The tax is due if you're a single taxpayer, and your overall modified adjusted gross income, MAGI, from all sources is more than $200,000 for the year. The threshold increases to $250,000 for married taxpayers who file jointly and qualifying widow or S. It drops to just $125,000 for married taxpayers who file separate returns. How to pay taxes on Bitcoin. Establish a record-keeping system for all your transactions, and keep track of when you acquire and when you dispose of Bitcoin. Identify your cost basis method and your exchange rate. Then record the dispositions of Bitcoin on Schedule D and Form 8949. Normal capital gain strategies apply. You can offset gains with losses, time your dispositions to qualify for long-term treatment, harvest your losses, and harvest your gains. A tax professional can help you with these concepts. The income is reportable on your personal tax return, normally due April 15th of each year, or a subsequent working day if April 15th falls on a holiday, unless you request a 6-month extension from the IRS.